Hey, Nick Hodge here. Let's jump right into it. I just cut this check for $35,000. And over the next 12 to 18 months, I expect my money to at least triple. But I wouldn't be surprised to see 5x or even 10x returns instead. This isn't money I'm investing in some blue chip stock or index fund or any other stock on the open market. This is a direct investment into one of the hottest uranium companies in America. The kind of deal Wall Street family offices get invited to that no one else ever hears about. Why don't they hear about it? Because this special type of deal is not found on any stock exchange. While this is a public company, these lucrative shares are not available in your brokerage account. They're not listed on Yahoo Finance. And no one on CNBC, Fox Business, or Bloomberg is talking about them. Because this is an invitation-only opportunity. And in the next few minutes, I'm going to explain what this opportunity is, why I believe it could deliver the same returns as my previous uranium deals, which are some of the biggest winners of my career, and how you can invest alongside me at the same price and terms. But first, I need to tell you something important. I'm only accepting 100 partners into this arrangement. After that, the door closes permanently. If you want in, I need to hear from you as soon as possible, because this message is going out to 70,000 people. And these final spots are going to fill very quickly. There's a good reason for that. When I've made these kinds of direct uranium investments in the past, I've made 850% over a 3-year period when a strategic buyer acquired the company. And I've seen 1,051% returns when the position was held through multiple acquisitions. To be clear, those aren't back-tested results from some computer model. That's real money I made from a single uranium company, URZ Energy, that I accessed through exclusive off-market deals starting in 2017. While traditional advisors were struggling to beat the S&P 500, I was compounding capital at institutional rates through opportunities most people never knew existed. And today, I believe a very similar situation is about to play out, but only for a small number of people who gain access to this off-market opportunity, which is why I'm speaking to you today. Over the past 17 years, these off-market opportunities have been my specialty and the primary way I've built my own wealth. Right now, I have over 40 winning positions in my open portfolio, averaging over 275% gains. That includes a battery metals company up 2,425%, a copper explorer up 670%, a lithium junior up 644%, a junior resource miner up 540%, a gold exploration company up 466%, another gold junior up 467%, a uranium company up over 450%, a copper development company up 267%, plus dozens more across uranium, lithium, copper, and gold. What's the secret to my success? Put simply, I'm connected. That's how I get access to off-market deals at lucrative rates that most people never hear about. I get invited into these opportunities before institutions lock them up. Deals that close before they're ever announced publicly. This is the secret to how the richest investors keep getting richer in all markets. And this is the world I'm inviting you into today. Let me give you a perfect example. The company I mentioned a few minutes ago, URZ Energy, was struggling back in 2017. Shares were trading around 15 cents on the Toronto Venture Exchange. The uranium market was still in a brutal bear market after Fukushima. Spot prices were stuck at $20 a pound. In fact, here's what the market looked like at that time. According to Investing News Network, 2016 was an ugly year for the uranium industry as its price dropped to 12-year lows of $18.25 a pound. Macquarie analysts wrote in January 2017, uranium pricing is currently trading 50% of where it was 40 years ago in nominal terms. Craig Perry, CEO of ISO Energy, summed up the sentiment saying, "The resource sector had been in the worst downturn seen in decades." Most people looked at URZ and walked away. But here's what they didn't know. URZ was putting together an exclusive funding round, raising capital at 15 cents per share with warrants attached at 40 cents. And it was only being offered to a small group of connected insiders. So one afternoon, I got word about the opportunity through my network. The team behind URZ had successfully taken a company called Uriners public during the last uranium boom in 2007. They had a proven track record of building and selling uranium assets. And despite the brutal bear market, the fundamentals were too compelling to ignore. So I wired $15,000 despite the down market. This wasn't available through traditional brokers. The deal was distributed through personal networks to select investors. The public market had no idea this opportunity even existed. About a year later, Azarga Uranium acquired URZ in a strategic transaction. My position was up 300% in under 12 months. That $15,000 became $60,000. While the S&P was delivering around 20% that year, I was making 300% through an exclusive deal that wasn't available through conventional channels. After Azarga acquired URZ, the combined company needed additional capital to advance its projects, so they structured another funding round. This one was priced at 45 cents per share with warrants at 75 cents. The company was working to revive the Dewey Burdock uranium project in South Dakota, a massive resource stuck in regulatory stagnation. Most investors thought the permitting would never happen. The NRC had been dragging its feet for years. Environmental groups were challenging every step forward. The investing public had given up on Azarga. But Blake Steele, who was president and CEO of Azarga, was leading the charge. And Blake had successfully navigated regulatory challenges on other projects before. When he reached out about Azarga's funding opportunity, I didn't hesitate. I invested in the Azarga round. Once again, this was a closed network opportunity for connected investors. And sure enough, Blake delivered the goods by securing the permits. Then, in 2022, Encore Energy, a well-funded U.S. uranium producer, acquired Azarga at a significant premium. When I added it all up between my original URZ position and the additional capital I put in when I exercised warrants during the Azarga phase, I had invested a total of about $35,000 across both rounds. That position delivered blended returns of 850%. My $35,000 total investment had turned into over $300,000. Now, early investors who held through the entire cycle saw something even more remarkable. Encore Energy became one of the only domestic uranium producers in the United States, right as the uranium market was heating back up. Russia was threatening export bans, utilities were scrambling to secure US-based uranium supply. So Encore's stock climbed higher and higher. At the peak, early URZ investors who held through both acquisitions were up as much as 1,051%. A $50,000 position in that 2017 URZ deal could have grown into $575,000 plus. But here's the reality. This wasn't available through traditional brokerage accounts. Connected investors accessed these opportunities through their networks. You had to be in the room, so to speak, to be in the deal. The public market only got involved after shares were already trading, often at double or triple the original entry price. Let's put those numbers into perspective. That 1,051% return is 6 times better than what the S&P 500 delivered over the same time frame. A $50,000 S&P investment in 2017 would be worth around $150,000 today. But why settle for 167% over 8 years when connected investors are accessing off-market deals that compound at 850% or even 1,000% over the same period? The difference comes down to 2 words: direct access. This isn't unique to my URZ experience. During the last uranium bull market from 2003 to 2007, early-stage investors saw extraordinary returns. Energy Fuels delivered 13,275% gains. UEX Energy surged nearly 14,000%. Laramide Resources jumped over 30,000%, and Paladin Energy climbed more than 130,000%. Many of these gains started with exclusive off-market opportunities before the companies exploded on the open markets. But you had to be connected to be in these deals. Network access is everything. It doesn't matter how much wealth you've built. If you don't have access to these exclusive deals, you'll be stuck with the same 8 to 15% returns traditional strategies deliver. While connected investors are compounding capital at 300%, 850%, or 1,000% or higher through off-market opportunities. And that brings me to why I'm speaking to you today. Over the past decade, I've cultivated an exclusive network that feeds me these opportunities every single week. We end up investing in at least 6 deals per year and usually more. In June of this year, 2025, we financed a gold explorer in Europe at 22 cents a share. Those shares hit 43 cents as drills turned, which is up 95%. And the warrants are already in the money, giving us the ability to instantly increase our profits should we exercise them. In July, we backed a copper gold prospect generator at 30 cents. Shares touched $1.48 in a matter of weeks, a 393% gain. And our 50-cent warrants are nearly 200% in the money. That's an instantaneous additional 200% gain. In August, we funded a uranium developer at 5 cents. Shares traded as high as 27 cents in the following weeks, up 440%. With 10-cent warrants already up an additional 170%. Then just in September, we funded a project generator with Scandinavian critical and precious metals projects, again at 5 cents a share. Those shares have already hit 13.5 cents, up 170% in a little over a month, with warrants at 10 cents already giving us an additional 35% win. $10,000 into each of these deals would have produced around $150,000 in total profit, all in just 4 months. But only a handful of people have had the chance to see these gains, because I've kept my deal flow mostly private. Only my family, close friends, and a small inner circle of about 150 people have access to the deals that I'm invited to. But today, for a select few, that all changes. For the first and last time ever, I'm offering exactly 100 people, and no more, a permanent seat at the table. These partners can invest alongside me and my business partner Gerardo Del Real at the same prices we get, on the same terms, with detailed alerts when we identify compelling deals with the potential to 10x an investment. Why am I doing this now? Because I've just identified a massive new opportunity in the uranium space, right at the center of America's energy crisis. And I've been waiting for this moment. You see, I don't bring opportunities to my partners lightly. Over the past year, I've passed on dozens of off-market opportunities. These were companies with weak management, projects with questionable economics, deals with misaligned incentives. So I've been patiently waiting for just the right opportunity to cross my desk. Something with the potential to become a single stock fortune maker, just like what I experienced with URZ Energy. And this is it. This is the deal I've been waiting for. A proven historical resource, management with significant insider ownership, a jurisdiction with a track record of production, and market conditions that are 4 times stronger than when I invested in URZ back in 2017. This is the opportunity, and I'm about to show you everything you need to know to take advantage of it today. But again, after these 100 seats are filled, I will never offer an opportunity like this again. My inner circle already has 150 members, and adding 100 more brings us to 250. Once we hit 250 members, that's it. We close the doors permanently. Why such a strict limit? Because these exclusive opportunities have finite capital capacity. When a uranium company is raising $2 million and my partners want to invest a combined $6 million, the math just doesn't work. I have to keep the group small enough that everyone can participate meaningfully. So this is it. The final chance anyone will ever have to join my inner circle and get in on what I believe is one of the best opportunities in the uranium space right now, today, at the start of America's biggest nuclear energy boom in history. In just a moment, I'll tell you what this uranium opportunity is, why the market conditions are more favorable than anything I saw in 2017, and how you can invest alongside me at the same price I'm getting. But first, I want to show you how I've built the network that gives me access to these opportunities, because access is the key to unlocking the lucrative world of off-market investing. Like I mentioned at the beginning, my name is Nick Hodge. I'm the co-founder of Digest Publishing, one of the fastest growing independent financial research firms in North America. I'm also the founder and editor of several premium research services, including Foundational Profits and Underground Alpha. Over the past 17 years, I've had a lot of success investing the normal way through the open markets. But the truth is, nothing in the public market compares to the wealth-building power of off-market deals known as private placements. I've personally invested over $2.3 million and generated over $1.4 million in profits through these deals. That's nearly a 60% total return on deployed capital. Here's a specific example of how powerful this strategy can be. In September 2020, a copper explorer called Aldebaran Resources was putting together a private placement at 30 cents a share. The market was in chaos due to COVID. Junior mining stocks had been crushed. Most investors were paralyzed with fear. But here's what separated me from the crowd. I had access to a private placement that wasn't available through any other brokerage account. It wasn't listed on any exchange, and it wasn't being offered to the general public. Through my network, I got the call about this opportunity. I evaluated the fundamentals. The valuation was deeply distressed due to panic. Copper demand would inevitably recover, so I participated at 30 cents a share. And over the next 4 years, copper prices rallied as global economic activity resumed. The company advanced its project, and by late 2024, I exited at an average price of $1.78. That's a 495% gain. A $10,000 investment became $59,500. Most investors only discovered this company after shares were already trading at 60 cents or 80 cents on the open market. By then, they were paying double or triple what I paid through the private placement. Or take what happened in September 2019 with Rupert Resources. This Finnish gold explorer was putting together a funding round at 85 cents per share. This was a company virtually unknown outside a tight circle of connected investors. No mainstream coverage, no analyst reports, no public awareness whatsoever. I evaluated the management team. I liked the valuation relative to comparable companies, and I saw asymmetric upside potential. So I participated in the private placement at 85 cents. Over the next 2 years, the company executed its plan. The market eventually recognized the value, and by December 2021, I exited at $5.55. That's a 553% gain. A $10,000 investment became $65,300. By the time this company showed up on retail investors' radar, it was already trading at $2 or $3 a share. They missed the entire ground floor opportunity that private placement investors captured. Here's one more example that shows the power of a special kind of leverage available to us in these deals. In September 2020, a private placement opportunity came across my desk. Cucho Copper was raising capital at 20 cents a share. But here's what made this especially compelling. Each share came with a half warrant at 30 cents. Warrants give you the right to buy additional shares at a locked-in price for a set period of time. They're one of the most powerful wealth-building tools in private placements, and they're only available to private placement investors. This company was trading at distressed valuations, but the fundamentals were solid, and I knew the sector would recover. So I participated at 20 cents a share with half warrants at 30 cents. And 14 months later, shares hit $1. That's a 400% gain on the shares alone. A $10,000 investment became $50,000. Plus the warrants at 30 cents delivered massive additional leverage as the stock climbed. After I got in at 20 cents with warrants attached, Open market investors ended up paying 40 cents or 50 cents without any warrants. They paid more than double what I paid, and they got none of the warrant upside. This is why I love private placements. Now, after navigating opportunities like these, word started spreading through the back rooms of the private market, where all the wheeling and dealing takes place. So more CEOs started reaching out, and more opportunities came across my desk. That's when the major resource conferences started inviting me to speak. You might have seen me at the New Orleans Investment Conference, or the Cambridge House Resource Investment Conference, or the Precious Metals Summit in Beaver Creek, the Rick Rule Symposium, or on panels alongside Rick Rule himself, Doug Casey, and James Dines, and others. I've also been featured in dozens of financial media interviews, from Stock Pulse to Wall Street Bullion to the KE Report and more. Because of my track record, and because of the network and connections I've built over my career, some of the most successful resource investors in the world now partner with me on deals. Rick Rule, who's possibly made billions in the resource sector, has co-invested with me in at least 4 or 5 different private placements. Doug Casey, who's a subscriber of mine, has publicly said my private placement recommendations are quite good and worth paying attention to. He has one of the 250 spots locked up already. Gerardo Del Real and I have partnered on dozens of opportunities together across uranium, lithium, copper, and more. And Jeff Phillips, one of the most successful private placement investors in the business who's made hundreds of millions, is my personal mentor. Jeff has financed companies that have delivered 3,900% returns on rare earth plays and over 10,000% returns on lithium discoveries like Patriot Battery Metals. He's been doing this for over 30 years, and as you're about to see, a lot of my process stems from what Jeff has taught me. Bottom line, when legends like that are willing to put their own money into the same deals I'm investing in, it tells you something about the caliber of the opportunities that I have direct access to. But I'm not speaking to billionaire resource investors right now. They already have all the insider access they could ever want. I'm speaking to anyone who understands that traditional strategies will only get you so far. Investors who are looking for a better way to deploy capital for institutional rates of return without the high costs. That's what I'm offering today with these last 100 seats. This is the last time anyone will have the opportunity to access my private deal flow. You'll get the same opportunities I invest in, at the same prices, on the same terms, with alerts when I identify compelling opportunities, including the uranium deal I just invested $35,000 into, the one I believe could deliver 3 times, 5 times, or even 10 times returns over the next 12 to 18 months. But before I tell you about that specific opportunity, I need to explain something important about how the off-market investment world actually works. Because there's a fundamental difference between how most people invest and how connected investors build lasting wealth. Here's what I mean. Most investors think the path to wealth is through traditional strategies, buying stocks on the open market, working with a financial advisor, building a diversified portfolio of mutual funds and ETFs, following the same playbook everyone else is using. And look, there's nothing wrong with those strategies. They're perfectly fine for building steady, predictable returns. 8 to 15% per year is definitely respectable, but here's what they don't tell you. There's another level where the real wealth is made, the kind of wealth that compounds at 300%, 850%, 1,000%, or even higher. And it's not through traditional investment channels. It's made through off-market opportunities that most people are completely unaware of. You see, by the time an investment opportunity shows up on your brokerage platform, when it's covered by analysts, and when CNBC finally, if ever, mentions it, the early gains have already been captured. Let me show you what I mean. Let's say you're watching CNBC one morning and you see a uranium stock that just surged 150% overnight. The talking head says, "This company just announced a major acquisition. The stock has exploded." You think, "I need to get in on this uranium boom." You call your broker. You buy 1,000 shares at $4.50. You feel good. You got in on a hot sector. But here's what you don't know. Here's what they'll never tell you on CNBC. 6 months earlier, Rick Rule, Doug Casey, and a handful of connected insiders, including me, bought into that same company through a private placement at $1.20 per share, with half warrants at $2.40. By the time you bought at $4.50 thinking you were early, we'd already made 275% on our shares. And our warrants? They were 87% in the money before you even heard the company name. Then the stock hits $8. You're excited. You've almost doubled your money. But we're not doubling our money. We're exercising our warrants at $2.40 and selling into the strength at $8. That's a 233% gain on the warrant conversion alone, on top of the 275% we already made on the original shares. While you're celebrating your 78% gain, we're walking away with over 500% gains on the same company. Same stock, but radically different results. For most people, there was never even a chance to get in at $1.20. That private placement closed before it was ever announced publicly. The only people who knew it existed were the insiders who got the phone call. And unless you're in that network that gets those phone calls, you're permanently locked out of the best opportunities and end up buying someone else's profit. This isn't about being the smartest or doing the most research per se. It's about relationships. The CEOs raising capital are calling the people who've financed their previous deals, the people who've made them money before. And if you're not in that circle, the door is closed. Now, I'm not telling you this to make you feel bad. I'm telling you this because there's a solution. And that solution is what I'm offering you today. No one can build these relationships overnight. But that's okay because I've already built the relationships. And today, I'm offering you a bridge into that world. Once you're in, you'll never look at traditional investing the same way again. Here's how this works. When a junior resource company needs to raise capital, they have two basic options. They can do a brokered financing through an investment bank, or they can do a non-brokered private placement directly with investors they know. Non-brokered private placements are where the best opportunities hide. Here's why. When a company does a non-brokered raise, there's no public distribution. No press release until after the deal closes. No way for traditional investors to participate. Instead, the CEO picks up the phone and calls 20 or 30 investors he personally knows. A few executives reach out to investors they've done deals with before. Maybe the CFO sends emails to a curated list of accredited investors. And within 24 to 48 hours, the entire private placement can be fully subscribed. Every single share is spoken for. The deal is gone. Then, 3 or 4 days later, the company issues a press release announcing that it has closed a private placement. That's when the public finally finds out about it. But by then, it's too late. All the shares were already allocated. The deal was closed days earlier. Traditional investors had no way to participate in that opportunity. It simply wasn't available through conventional channels. Now here's where some people make a critical mistake. When they hear about a company after the private placement closes, they think, okay, I'll just buy shares on the open market. So they buy at 25 cents or 30 cents or whatever the market price is at that moment. But what they don't realize is by buying on the open market, they've already given up 50% to 100% or much more of the potential gains because private placement investors got in at 15 cents. If you're buying at 30 cents on the open market, you're paying double what the insiders paid. Plus, the insiders got warrants. Warrants that give them the right to buy additional shares at 40 cents for the next 2 to 3 years. Those warrants can multiply gains by 2, 3, or even 5 times when a stock really takes off. But if you buy on the open market, you don't get any warrants. You just get the shares at an inflated price. So you're starting the race 50 yards behind the insiders. Here's the bottom line. Most investors rely on traditional strategies and traditional channels, buying what's already public, already discovered, and already expensive. Meanwhile, connected investors are participating in off-market deals at ground floor prices, often with warrants attached that multiply their gains. This is why you need to get inside my network. Then you can see the opportunities I see before they're available on the open market. And you can invest at the same prices I invest at with the same warrant structures. That's what these 100 seats are all about. When you join me as a partner today, You're not just getting investment recommendations and stock picks. You're getting direct entry into the same private placement deal flow that I invest millions of my own capital into. You're entering the next level of personal wealth creation. And it all boils down to access. Because when you're in the room, you're in the deal. Now, you might be wondering, if network access is so important, why open up 100 seats now? Why not 6 months ago? Why not wait another year? And the answer is simple. The market conditions for uranium are stronger right now than anything I've seen in nearly 2 decades. You see, I don't just look for good deals. I look for good deals at the right time. When I invested in URZ back in 2017, uranium was at $20 a pound. The market was broken. Nobody wanted to touch uranium, but I could see what was coming. And that patience paid off with 850 to 1,000% returns. Today, I'm seeing something similar but even more powerful, because this time, it's not just a commodity cycle recovering, it's 3 massive forces converging at the same time. Forces that are reshaping the entire energy landscape, that are creating unprecedented demand for uranium, and that connected insiders are already positioning for. Let me show you what I mean. Force number 1 is we're entering a generational uranium bull market. Uranium spot prices hit a 2025 year-to-date high of $82.63 a pound at the end of September before settling around $80 a pound in October. That's up from $18 a pound when I invested in URZ in 2017. But here's what's really driving this market. According to a September 2025 World Nuclear Association report, global uranium demand is projected to increase 28% by 2030 because of energy security and decarbonization goals. There are currently 440 nuclear reactors operating worldwide, with 70 under construction and over 100 more in the planning stages, plus proposals for 300 more. Countries around the world pledged at COP29 to triple nuclear energy capacity by 2050 as part of their climate commitments. As John Champalia, CEO of Sprott Asset Management, recently said, "We've been incredibly bullish on uranium. It generates substantial electricity on a large scale, which is precisely what the grid requires at this moment. With the exception of Germany, I think every country around the world has flipped back to nuclear power, which is a very powerful signal." This isn't a short-term spike. This is a fundamental long-term shift in the global energy landscape. The kind of shift that creates decades-long bull markets where early private placement investors compound wealth at asymmetric rates. Force number 2 is the critical supply shortage in the United States. Here's the part that makes this particularly explosive for U.S. uranium companies. The United States currently imports 92% of its uranium, according to the U.S. Department of Energy. We need 50 million pounds a year and only mine about 1 million pounds. And as the first deputy CEO of Rosatom, Russia's atomic energy company, recently confirmed, 25% of U.S. nuclear power plants are supplied with Russian uranium. Russia recently banned uranium exports to the U.S., removing a major source of supply. And the Trump administration has explicitly declared domestic uranium production a national security priority. U.S. Energy Secretary Chris Wright announced that the government intends to boost its strategic uranium reserve to ensure America no longer depends on Russian fuel, saying, "We need a lot of domestic uranium and enrichment capacity." Secretary Wright even said nuclear is going to become sexy again, marking a dramatic shift in how the government views this critical industry. And it's not just talk. The Department of the Interior just fast-tracked the approval of the first new uranium mine on federal land in decades. President Trump's executive orders from May 23, 2025, call for a 4-fold expansion of U.S. nuclear capacity to 400 gigawatts by 2050. The orders invoke the Defense Production Act to onshore the nuclear fuel cycle as a priority for national security. According to Bank of America, Nuclear energy represents a $10 trillion potential market opportunity to answer the world's power shortages. Plus, a historic first just happened. In August 2025, the Palisades nuclear plant in Michigan became the first decommissioned U.S. nuclear plant to officially transition back to operational status, proving that reactor restarts are viable and accelerating nationwide. The U.S. government is actively encouraging domestic uranium production, and they're willing to streamline regulations to make that happen. This is creating a perfect storm for early-stage U.S. uranium projects. And finally, force number 3 is the fact that tech giants and the military are securing uranium for AI and national security. Artificial intelligence data centers consume enormous amounts of electricity. Microsoft, Amazon, and other tech giants are now securing uranium supply directly to power nuclear reactors for their AI infrastructure. Small modular reactors, or SMRs, are being deployed specifically to meet this AI-driven electricity demand. In fact, Meta Platforms just signed a landmark 20-year deal to purchase over 1,000 megawatts of baseload electricity from Constellation Energy's Clinton nuclear power plant. But it gets even more interesting. On October 14, 2025, the U.S. Army announced the Janus program, which is a nuclear reactor program aimed at installing SMRs on U.S. Army bases around the world. Energy Secretary Chris Wright said that the next generation SMR would go live at the Energy Department's Idaho National Laboratory by next July. This falls in line with Trump's executive order to have a nuclear reactor operating on a military base no later than the end of September 2028. Nuclear stocks saw their prices climb on the announcement. Uranium Energy Corp, Energy Fuels, and Centrus Energy stocks jumped between 20 to 25% on the news. And just weeks ago, 2 massive announcements shook the nuclear industry. On October 27th, Google and NextEra Energy announced a partnership to restart the Duane Arnold Energy Center in Iowa, a 615 megawatt nuclear reactor that will power Google's AI data centers starting in 2029. Then, just a day later, Washington announced at least $80 billion in new U.S. nuclear reactors through a partnership with Westinghouse, Brookfield, and Cameco, signaling massive institutional commitment to sustain nuclear demand. So just to recap, Google is restarting shuttered nuclear reactors. Washington is funding $80 billion in new reactor construction, and the U.S. military is installing nuclear reactors on bases worldwide. These are multi-billion-dollar commitments happening right now. But the key thing is, this is creating an entirely new source of uranium demand that didn't exist 3 years ago, and it's driving institutional capital into early-stage uranium projects at a pace we haven't seen since 2007. When you combine these 3 forces together, a generational bull market in uranium, a critical supply shortage in the United States, and tech giants plus the military buying uranium for AI and national security, you get the perfect environment for private uranium investments to deliver asymmetric returns. That's why I just committed $35,000 to a new uranium deal. And it's why I'm offering these 100 seats to you right now. Because I believe we're at the beginning of a multi-year uranium bull market that could make early private placement investors extraordinarily wealthy. And if you qualify, I want you in on it. But to maximize your earning potential, you need to be in the right deals at the right prices. That means you need to be in the back rooms where the deals are taking place, because everyone else is going to get stuck with inflated open market prices. That's why I'm urging you to claim one of these 100 seats today, before they're gone. Because once we reach maximum capacity, the only way to ever get a seat at the table is if someone gives up their seat. And that almost never happens. In just a moment, I'll tell you how to claim your seat so you can get in on this new uranium opportunity that could 3x, 5x, or even 10x your money. But I want to take you behind the curtain for a moment, so you can see how I've been able to separate the winners from the losers in the private market. As I said, not every deal is worth investing in. In fact, many are risky as hell. Once you understand my process, you'll understand why this particular uranium deal has gotten me so excited. Here's how I separate the 10x winners from everything else. Over the past 17 years and more than 100 private placements, I've developed a very specific system for evaluating opportunities. Because here's the truth. Most private placements in the uranium sector never amount to anything. The company runs out of money before proving up the resource. Management dilutes shares with endless capital raises, or the project turns out to be nowhere near as promising as the initial pitch suggested. I've seen all of these scenarios play out. I've had positions that lost money for sure, and I've learned many hard lessons along the way. That's why having a systematic filtering process is absolutely critical. When an off-market opportunity passes through my filter, there are things I look for that significantly increase the probability of seeing 500%, 1,000%, 10,000%, or even higher. Let's walk through how this system works. Then I'll show you how the uranium deal I just invested $35,000 into stacks up. My mentor, Jeff Phillips, who's been successfully financing junior resource companies for over 30 years, has said, share structure is my number one thing, and then people. But if it's a bad share structure, I don't want to be involved. If it's a good share structure and good people, you follow the opportunity. As I said before, much of what I know I learned from Jeff. So my approach is very similar to his, with share structure being paramount. Beyond that, I look for three things in every private placement. First, I like to see either a proven historical resource that's already been drilled and documented, or at least some past development done on the project. Not grassroots exploration where you're hoping for a discovery. I want projects where mining companies have already spent tens or even hundreds of millions proving up a uranium deposit, and then walked away because of market timing or corporate strategy changes. These are assets you can acquire for pennies on the dollar, and then unlock massive value during bull markets. This is how Rick Rule made hundreds of millions, if not billions, in the resource sector. Buying proven assets cheap, then selling them expensive. Second thing is heavy insider ownership with management's interests perfectly aligned. I want to see the CEO, board members, and technical team owning 30, 40, or even 50% of the company's shares. When insiders have that much of their own wealth on the line, they're not going to dilute shares at depressed prices or pay themselves excessive salaries while the stock goes nowhere. Jeff puts it this way: I want to get in a boat with a bunch of guys with the same goal, and we're all going to stick to it, and we're either going to get there or we're not. Third is a severe valuation disconnect between market cap and asset value. I look for situations where a company controls 200 million, 500 million, or even $1 billion worth of resources, but the market is valuing the entire company at just 10, 20, or 50 million. When you can buy $500 million worth of assets for $15 million, the revaluation opportunity is enormous. When all these elements align, asymmetric returns follow. Now, let's see how the uranium opportunity I just invested $35,000 into measures up against this filter. The first element is a proven historical resource. This project sits on top of an 11.4 million pound historical uranium resource. That resource was proven through over 1,000 drill holes by Kerr-McGee back in the 60s and 70s. Kerr-McGee was one of the largest and most successful uranium producers in U.S. history. They spent what would be tens of millions of dollars in today's money drilling and proving up this resource. Then uranium prices crashed in the 1980s, and Kerr-McGee walked away. And for the past 40 years, this world-class uranium deposit has been sitting there dormant. All the drilling data still exists, the geological reports are documented, and the expensive exploration work has already been done. Now, in 2025, with uranium prices at $80 a pound and modern in situ recovery mining technology available, this historical resource can be revalued using current standards. If you had to discover and drill an 11 million pound uranium resource from scratch today, it would cost you well more than $30 million. But because this resource was already drilled decades ago, you can acquire it for a fraction of what it would cost to discover today. The second element is insider ownership. Insiders and founders control 43.3% of this company. That's over 17.5 million shares owned by the people running the business. But here's the critical detail. 36.5% of those insider shares are locked up and can't be sold until October 2026. The CEO, board members, and founding shareholders can't sell. They're locked in through the next drilling program, through the resource update, through the in situ recovery testing, and through whatever catalysts drive the stock higher. When insiders are locked in like this, everyone wins or loses together. And there's a whole lot of incentive to make sure we win. Plus, their last private placement was priced below the average cost basis of insiders. Management was essentially saying, we believe in this project so much, we're letting new investors come in at better prices than we paid ourselves. That kind of alignment is incredibly powerful, and it's what I saw in my biggest uranium winners before they delivered triple-digit returns. Oh, and one more thing. Blake Steele, the former president and CEO of Azarga Uranium, owns approximately 10% of this company. Blake orchestrated Azarga's 2018 merger with URZ Energy. Then, as CEO of Azarga, he secured the critical permits for Dewey Burdock. Then, he negotiated Azarga's acquisition by Encore for around $200 million, which ultimately delivered those outsized returns of 850 to 1,000% I talked about earlier. That's the kind of guy you want to get in the boat with on these deals. The third element is a valuation disconnect. The company's current market capitalization is just $15 million. Now remember that 11.4 million pound historical uranium resource? At the current market cap of just 15 million, the market is valuing that entire asset at just $1.30 per pound of uranium. To put that in perspective, uranium companies with in situ recovery projects like this one are typically acquired at $4 to $15 per pound of resource, which means just that single historical resource alone is trading at a 65 to 90% discount to comparable companies. Now here's where the valuation disconnect gets even more extreme. That $15 million market cap isn't just buying you the historical project. It's also buying you all the past work that was done. Remember, Kerr-McGee spent tens of millions of dollars drilling and proving up this resource, and it spent many millions more building the mine. It even sank the shaft and began underground development, but never mined anything. You get all that value for free. Plus, the company controls over 12,000 hectares of exploration ground in Canada's Athabasca Basin, home to the world's highest grade uranium deposits. Recent drilling returned 572 parts per million U3O8, confirming uranium mineralization. It also has an additional 4,500 hectares in the Athabasca Basin where they can earn up to 75% ownership. The market is assigning zero value to these Canadian properties right now. None of these additional Athabasca Basin assets are reflected in that $15 million valuation. Here's what a sum of parts valuation could look like. If we value the historical resource at a conservative $5 per pound, which is well below the price used for many recent acquisitions, that 11.4 million pounds times 5 equals $57 million. The Athabasca Basin exploration properties could easily be worth another $50 million based on size and drill results. So let's break this down. A conservative estimate of the total asset value is just over $100 million, but the current market cap is just $15 million. That makes the implied upside over 600%. And don't forget the near-term catalysts in play. The company has outlined a very specific work program over the next 12 to 15 months. They're launching confirmation drilling with 20 to 40 drill holes at the historical site to prove up the resource using modern methods to provide the data needed for an updated resource estimate. Then they'll publish the first ever exchange-compliant resource estimate. This is critical because the historical resource from the 1960s has never been updated to modern reporting standards. A compliant resource will give institutional investors the confidence to buy in. Next, they'll complete in situ recovery amenability testing. This will prove whether the uranium can be economically extracted using low-cost ISR mining methods, the same technique that has made other U.S. uranium producers so successful. This is a potential game changer for a tiny $15 million market cap company. Successfully demonstrating ISR viability would transform this from a historical resource into a near-term production candidate, the exact catalyst that drove my previous uranium winners to triple-digit returns. The company is targeting 150,000 pounds per year of uranium production. At $80 per pound, that's approximately $12 million in annual revenue from a company currently valued at just $15 million. Each of these catalysts has the potential to drive revaluation of 50%, 100%, or 200% and more, and they're all happening within the next 12 to 15 months. When all three elements align, a proven 11 million pound historical uranium resource that's already been drilled and documented, 43% insider ownership with shares locked up until October 2026, and Blake Steel owning approximately 10%, a $15 million market cap on assets that could be worth $100 million or more, plus a uranium bull market at $80 per pound, Trump fast-tracking domestic uranium production, big tech investing billions into nuclear power, and multiple near-term catalysts over the next 12 months, the potential for delivering 3x, 5x, 10x returns or even higher becomes very real. Let me show you what's possible when you position capital correctly in this private placement. Let's say you invest $10,000 at the current private placement terms. Based on the structure I participated in last time, you'd receive shares plus half warrants. Watch what could happen as the catalysts unfold. Initially, we could see a 3x return. After the company releases its updated resource estimate in Q2 2026 and proves ISR amenability in Q3 2026, the market could begin to revalue the company toward peer evaluations. Even at just $5 per pound of resource, which is well below many peers, the stock could reach 3x your entry price. A $10,000 investment becomes $30,000 in this scenario. That's a 200% return while traditional strategies struggle to deliver 15%. The next prong could kick things up a notch. After strong drill results and positive ISR testing, a strategic partner or larger uranium producer could express interest, or the company announces a production timeline and economic study. The market revalues it to $7 per pound of resource. Then the stock could reach 5 times your entry price. A $10,000 investment would become $50,000. You could also exercise your warrants for additional shares, thereby compounding your position further. The final catalyst could send the stock up 10x or higher. After proving up the resource and demonstrating ISR viability, Encore Energy, Uranium Energy Corp., or another strategic buyer could make an acquisition offer. Or the company could advance to production and the market would revalue it as a producer instead of an explorer. The stock would then reach 10 times your entry price. A $10,000 investment would become $100,000, just like it did with my investment in URZ and Azarga, plus warrant gains on top of that. Now imagine if you invested $50,000 instead of $10,000. At 10x returns, that's $500,000. This is how connected investors compound capital. Not through traditional advisors delivering 8 to 15% annual returns, but through private placements that deliver 200%, 400%, or 900% returns or more. You don't need to become an expert in uranium geology. You don't need to spend nearly 2 decades building relationships with CEOs and executives. You don't need to attend resource conferences or analyze hundreds of private placements, because I do all of that work. I identify the opportunities, I vet the management teams, I analyze the projects, I evaluate the share structure. All you need to do is join my network, review my research, make your decision, and complete a simple subscription agreement. The company sends you the documents, you review them, you wire your funds directly to the company, then the company sends you shares that you can deposit into your brokerage account. That's it. So if you're ready to get started, I've put all the details about this specific uranium opportunity that's happening now inside a special report called My Next Big Bet, an off-market uranium deal with 10x potential. It includes the company name, ticker symbol, private placement terms, and how you can participate right now. You'll get immediate access to that report when you claim one of the 100 remaining seats. But you need to move fast. The deal is open right now, and people are already jumping in. Once those 100 seats are filled, we reach maximum capacity, and you'll miss your chance to invest in this uranium opportunity alongside me at the same price I'm getting. But you won't just miss your chance to participate in this uranium deal, you'll also miss your chance to participate in all future deals that I bring my members into. Deals that could compound your capital at asymmetric rates. And you'll be back to relying on traditional strategies, while connected investors continue participating in off-market deals that deliver 260%, 850%, 1,000% gains or higher through networks closed off to the public. So here's how this partnership works. I'd like to give you immediate access to that special report on the uranium deal I just invested $35,000 into. But that's just the beginning, because what I'm really offering you today is something much bigger, a permanent seat at the table of my most premium and exclusive service, private placement intel. As I've been saying, we're capped at 250 total members. We've already filled 150 of the seats. That leaves 100 seats remaining. Once those 100 seats are filled, we will no longer offer this service to new members. Now I want to be completely transparent with you about something. These deals have finite capacity. And with the uranium bull market heating up over the past few months, it's gotten more competitive to get into the best opportunities. Here's how the process typically works. When I identify a compelling deal and send an alert to members, you submit what's called an expression of interest, or EOI, to the company. You tell them how much you want to invest. The company builds a list. Nick Hodge, $35,000. John Doe, $25,000. Jane Doe, $50,000, and so on. They add up all the expressions of interest. And here's where it gets real. If the company is raising $2 million and the total expressions of interest come to $3 million, cutbacks start happening. That's where the sausage really gets made. And this is where my role becomes nearly critical. When deals get oversubscribed, I go to bat for my members. I can call the CEO directly. I can use the relationships I've spent 17 years building to make sure my members get an allocation. I'll say something like, all my people are getting in, cut them back pro rata so everybody gets at least a piece. And because of my track record and the capital I bring to the table in these deals, companies actually listen. So here's my commitment to you. If you get one of the remaining 100 memberships to private placement intel and submit your EOI for this uranium deal by December 23rd, I'll make my best attempts to make sure you get an allocation. I don't put out deals where members email the company and get told no. That would be pointless. But here's what you need to understand. Speed does matter. In this bull market, capital is moving fast. If you're one of the laggards, if you don't decide right away, not only will you miss out on one of the last spots, but you'll also miss out on the deal. Because if you wait, the placement will already be oversubscribed and there will be no room left for you. So when you see an alert from me, you need to move. Review the opportunity, make your decision, and submit your EOI before the deadline. That's how you ensure you get a piece of the deals that can deliver 300%, 500%, 1,000% returns or higher. And that's why keeping the group at 250 members is so important. If we had 500 or 1,000 members, my influence wouldn't matter. There simply wouldn't be enough capacity for everyone to participate meaningfully. But at 250 members, with my network and relationships, I can do more to help ensure serious participants get serious allocations. So now let me be crystal clear about what you're getting when you join. Private Placement Intel is not a stock picking newsletter. I'm not sending you ticker symbols to buy through your brokerage account. It's not a trading service. I'm not telling you when to flip positions every few weeks. It is direct entry into my private deal flow, beginning with this uranium opportunity I've been telling you about today, and all future deals I bring to the table for as long as you remain a member. These are the most coveted deals in the financial world. It's how the wealthiest investors compound their capital at increasing rates no matter what's happening in the general market. And today's your one-time opportunity to join this unique corner of the market. Here's what happens when you become one of the 100 final members. You'll receive at least 6 private placement alerts over the next 12 months. That's a minimum of 1 every 2 months. But in active bull markets, like we're in now with commodities, I could send you 2 opportunities in a single month. Each alert includes the company name and complete background, details on the resource and management team, private placement terms including price per share and warrant structure, my complete investment thesis, and contact information to participate directly with the company. You'll review the opportunity, conduct your own due diligence, and decide whether to participate. When it's time to exit a position, I'll send another detailed alert explaining why I'm selling. But I typically hold private placements for 12 to 24 months, looking for the 500%, 2,000%, and even 10,000% gains that come from holding through multiple catalysts. You'll also receive portfolio updates every quarter showing current prices on all open positions, unrealized gains or losses, upcoming catalysts, my latest thinking on each position, and whether I'm considering taking profits. And I'll keep track of all the warrants and let you know when it's time to exercise. Plus, you'll get access to our model portfolio website where you can log in anytime and see every closed position with entry and exit prices, every open position with live tracking, and complete transparency on winners and losers. Here's a snapshot of our current open portfolio. This is every single winner and loser at this very moment. We're up an average of 250% across over 40 positions, and 13 of the last 18 deals have more than doubled in the last 24 months. I'd put this track record up against anybody's. In fact, I recently told a crowd of over 1,000 investors at the New Orleans Investment Conference that I'd pay them $2,000 if they could show me a better track record, because I know that this is the best performance in the space. Not one of the best, the best. Needless to say, no one's come forward to claim their $2,000 prize. When you join Private Placement Intel, you'll also get immediate access to my complete masterclass on how private placements work. This includes a comprehensive video course covering private placement mechanics, how to qualify as an accredited investor, how to participate in deals, how warrants work, and how to plan your own capital allocation. This training alone could save you from costly mistakes, because not every private placement delivers asymmetric returns, and having a systematic process for separating elite opportunities from everything else is critical. Now let's talk about what this partnership requires. High-level investors sometimes pay $50,000 or more annually for curated deal flow like this. Venture capital firms charge 2% management fees plus 20% of profits. Beginning next year, in the event that one of our current or soon-to-be Private Placement Intel members forfeits their seat, replacement members will pay an annual rate of $10,000, and there will never be any promotional discounts again. But for the final 100 members who join today, you'll get a final closeout rate of only $4,999. That's a 50% discount for the last Private Placement Intel members. The best part is your discounted rate will never change for as long as you remain a member. That's at least 6 private placement opportunities per year, complete training and ongoing support, and entry into the uranium deal that's open right now for less than the typical minimum investment in a single private placement. But you must claim your seat before these 100 final member slots are gone. Once you become a member, you'll likely stay one. Our retention rate is over 90% for private placement intel, which is unheard of in this industry. People love the service. Just take a look at what some current members have said. Roger says,
"Today I made over $42,000 on half the sale of one stock. This to me is a game changer."
Mark wrote in to say,
I've participated in 3 private placements. I am so impressed by the mountain of information that comes with your PPI offers. Thanks to you guys, my portfolio is looking good.
Todd's planning for a big retirement. He said,
Thanks to private placement intel, I'm planning to retire as a multimillionaire. It's just a question of when.
Doug shifted his retirement fiscal strategy to growth as a result of his subscription, saying,
I joined private placement intel in January of 2024. My wife thought I was nuts. We both laugh now. I have participated in 12 placements and 6 have doubled, 3 have tripled, and 1 is above 350%. My net return is about $530,000 Canadian. This has been an excellent service, and our main fiscal strategy has changed to grow our wealth rather than maintain it.
Dr. Allen told us,
Thank you for having made me at least 100 times my costs for all the subscriptions. The thoughtful updates are much appreciated.
Dr. Allen has made 100 times the cost of his subscriptions with us. That turns a $5,000 subscription fee into $500,000. When's the last time a financial product made you $500,000? As incredible as that is, it doesn't surprise me. Our biggest return ever from a private placement is 11,025%. It turned every $20,000 invested into $2.2 million. We and our participating private placement intel members did that. But that's just the beginning, because when we exercised the associated warrants, we made $4.45 million on that same $20,000 investment. I'll reiterate that we don't just have one of the best private placement track records in the world. We have the best private placement track record in the world. And today is your final chance to join the top private placement service at a permanently discounted rate. Now, you might have some more questions, so let's dive into some of the common ones we've received over the years. Do I need to be wealthy to invest in private placements? You need to be an accredited investor, which means you have annual income of $200,000 or more, or $300,000 with a spouse, or you have a net worth of $1 million or more excluding your primary residence. How much capital do I need to commit per deal? Most private placements have minimums of $10,000 to $25,000. I typically invest $25,000 to $50,000 per deal depending on the opportunity. I'd recommend having at least $100,000 in liquid capital available. That way you can participate in multiple deals throughout the year. How long do I need to hold these private placements? Most private placements have a 4-month hold period or similar restrictions, but I typically hold for 12 to 24 months to capture multiple catalysts. The asymmetric returns come from holding through drill results, resource updates, and strategic transactions. Are these investments risky? They absolutely can be. No investment is without risk, and private placements are on the more speculative side of things. That's why it's so important to make sure the deal structure and the people involved are as solid as can be. Again, as my mentor Jeff Phillips says, we want to make sure we're getting into a boat with a group of people who are all rowing in the same direction and who've got skin in the game. When you do that, the result is an average gain of 275% across over 40 open positions, as we have in the open portfolio. That's how you slash the risk substantially. What happens after my first year? Your membership will automatically renew at the locked-in final member rate of $4,999 per year. You'll receive renewal reminders before being charged. You can cancel anytime by contacting member services. But remember, if you cancel, you will likely lose your seat permanently. And with our retention rate above 90%, seats almost never open up again. And even if one spot does open up, all future members will pay $10,000 to claim a spot starting in 2026. Is there a guarantee? Yes. We completely guarantee your satisfaction. You'll have 6 full months to try the service out and participate in a number of deals if you choose to do so. During that time, we offer a 100% refund, no questions asked. To recap, when you claim one of the 100 remaining seats, here's what you receive. At least 6 private placement alerts over the next 12 months. The ability to enter into one of the hottest uranium deals in the market right now. My complete masterclass on private placements. Quarterly portfolio updates with my current thinking. Our model portfolio of all open and closed positions with real-time updates. And most importantly, you're gaining access to the best private placement deal flow in the industry. These are opportunities virtually nobody else can access or even knows about, because it's all about your connections when it comes to participating in the best off-market opportunities. And when you join me today, you plug directly into my network. I've spent most of my adult life building this network that gives me these opportunities. I've averaged well over 275% returns across the entire open portfolio, a feat likely unmatched by anyone. I currently have over 40 winning positions in my open portfolio, and today is your last chance to take advantage, but only if you're one of the first 100 people who act before we reach permanent capacity. No games, no faux scarcity. So here's what this all comes down to. You can keep investing the traditional way, relying on conventional strategies to deliver 8 to 15% annual returns, watching from the sidelines while connected investors quietly compound capital at 260%, 850% or higher through off-market deals. Or you can join me today. Get immediate entry into the uranium opportunity I just invested $35,000 into, as long as you get in before the December 23rd deadline. Position yourself to invest alongside Rick Rule, Doug Casey, and other legendary resource investors in select deals. And give yourself the chance to grow a $10,000 stake into $30,000, $50,000, or even $100,000 over the next 12 to 18 months through private placements. If you don't claim your seat today, you'll likely never have another opportunity to join my network. Even if a seat does open up, one day, years down the line, you'll have to pay at least $10,000. Or you can simply take one of the last 100 spots available for half that amount. Immediately start participating in deals such as the uranium one today and potentially make back your subscription costs, just like so many subscribers have done in the past. So if you're serious about participating in institutional grade private deals, if you want to invest at the same prices connected investors get, not the inflated prices available on the open market, and if you're ready to position yourself in the strongest uranium bull market in 18 years, click the button below to secure your seat now. I'm looking forward to welcoming you into private placement intel.